All right. So, yeah, just for you, Jeff, I'm Sven from Spaarvarkens.be. We're from Belgium. Our audience is 99.9 Dutch speaking, so I'll do the interview in English, but I also translate it into Dutch.
Okay.
We're mainly focused on starting investors. We do a course for investors. We also have a club edition where we do a portfolio for our members. And we have a reach of about 10 to 15,000 people who regularly read our articles.
Okay.
Okay, so let's start with the official part. So, hi everyone. Today we have Greenbriar CEO, Mr. Jeff Ciachurski, with us for an interview. Welcome, Jeff, and thank you for freeing up some time for Spaarvarkens.be. So let's start with a short company overview. So Greenbriar was founded in 2013. The company is listed on the venture market of the Toronto Stock Exchange under the symbol GRB. Greenbriar has a market capitalization of about 37 million Canadian dollars, and currently Greenbriar is focusing on the following three large projects. We have a Sage Ranch, a 995 housing units project in Southern California. We have Alberta, a 19 megawatt solar farm with an energy purchase agreement from Westlake Energy. And we have Montalva, an 80 up to 160 megawatt solar farm in Puerto Rico. And we only have half an hour time for this interview, so we will mainly focus on this Sage Ranch project and briefly touch the two others if there is time left. So let's begin with the Sage Ranch. Jeff, I've read that Sage Ranch is a 138-acre piece of land. Translate into another thing is 558,000 square meters to give a perception to our readers. It's located near the city center of Tehachapi in Southern California, and it was acquired by Greenbriar in 2009, almost 13 years ago, for a price of about $1.1 million. The deal back in 2009 included also initial project plans to zone the land into 688 housing units. A lot of time has passed since then, so let's fast forward to 2022, where the current Sage Ranch project has been rezoned from 688 to 995 housing units, and is now, since the end of 2021, a fully approved and permitted subdivision of Greenbriar. So a couple of questions for you, Jeff. What can you tell about how the 995 housing units are going to look like, what their features and options are, how is the ESG part fitting into the story, and last but not least, what are the timeframes here, where we have to look forward from breaking ground up to the last construction phase?
Okay, thank you very much, Van. And to all your subscribers, hello here, greetings from Newport Beach, California. We bought the property actually in 2011 for $1,040,000 to give some history. We put another $3.5 million into the project. If you look at the Altus report, which I published in a news release, the summary, but I did send to you, Sven, a copy of the whole document. Altus is the gold standard for valuations of real estate development all over North America. It values the project, net profit at 173 million US, and the net present value at $123 million. The reason the value is so high from the investment was that this project was already worked on in the late 1990s. So this was the key cornerstone piece of the only piece of undeveloped land in the middle of the Tehachapi area of 38,000 people. So there's actually technically there's a city that has 14,000 people, and then there's what they call the unincorporated area that has the balance of 24,000 people. So the entire contiguous population is 38,000 people. And to have it, the property in the center of town, obviously logistically, the property is adjacent the high school, it's adjacent the elementary school, it's adjacent the middle school. So it's not like one block away, it's actually adjacent. So the ESG aspects that you referred to, the environmental aspects, is you don't have to get into your car, which is typical in Southern California, where you have to drive 5 or 10 miles away to go to school, or even 1 mile away. You simply can walk to school from your home. So from an environmental standpoint, there's a very low carbon footprint from having the proximity to the schools and to the sports facilities. In the subdivision itself, we're building a swimming pool, clubhouse, basketball courts, 2 soccer fields, dog parks, and you are a 5-block walk to the historic downtown. And Tehachapi has a famous 120-year-old downtown that is historic, that brings a lot of tourists in every year. So from a location aspect, this was a project developed in the late 1990s. And after all the engineering and all the previous partners spent $21 million developing the property, the city approved the project in June of 2006, as you correctly stated, for 688 homes. 1 month later, we had what was called the Great Real Estate Super Recession in the United States, and the housing market completely collapsed. So these property owners no longer were able to sell the parcels to big national home builders like KB Homes, which was one of the biggest builders in the area. And instead, the partnerships financially wound up, and then the property was put for sale around 2009. If you were an investor and you went to talk to the owner of the property in 2009, before you would make the acquisition, you would walk over to the city and you would ask the city, look, I'm going to buy this property. Can I go ahead and develop it into the 688 homes that was previously approved in 2006, which, by the way, has a when the approval came in 2006, there was a deadline that you had to build it by, you had to start construction by 2008. When you approached the city's answer was no, we're not going to allow anybody to build on that property. The reason why the city said that was that Tehachapi remains the safest city in a radius of 50 miles. So it's the safest city in Kern County. It's very much of a Republican, to your audience here in Belgium or the Netherlands or maybe Germany or all over Europe. A traditional Republican town in California implies stability, it implies security, it implies law and order, it implies peacefulness. It'd be the opposite of a urban environment where there's a lot of homeless people, crime, and what have you. So that the people in town started to see the changing demographics occur in the outlying areas that have the population center of over 1 million people that want to move to Tehachapi, but otherwise could not move because there was no housing available. So when this housing crisis came in 2006 and the changing demographics started to occur after 1988, 1989 in the surrounding area, the city, with the exception of this property in 2006, was very reluctant to allow anybody to build. So after 2006, the city was even more resistant to allow any new population to come into the town. It wanted the town to be the pristine, safe area that the 38,000 people enjoy to this day. So I approached the city and I said, look, I want to buy it. And they said, sorry, we're not going to allow anybody to build. And I thought to myself, on behalf of Greenbriar, here is 138 acres in the middle of 38,000 people that previously was approved for 688 lots, which is still zoned for 688 lots. The zoning is there. And I can buy the whole thing for the shareholders for $1,040,000, which is about $1,600 a lot. This is insane. Now, of course, the city is saying, we're not going to allow you to do it. But because I'm a long-term investor and I feel I always build the assets, long-term assets with very large returns, I was willing to play the long game and buy the asset, which I could have easily bought for myself and had the beneficial interest of having my family, my wife and I enjoy the $123 million of profit. Instead, my concern was the shareholders. So in September of 2011, we bought the property and we held on to it till now. And in 2018, the city finally changed its opinion and said, look, we have thousands and thousands of engineering jobs at Edwards Air Force Base, at SpaceX, at Virgin Galactic, at all the huge aerospace industry that is 40 miles away and only a 35-minute drive. And we're comfortable now that if you build this project, that we're going to get upper middle class, very strong professional families moving into these homes. And so when they were convinced in 2018 that that would be the case, they allowed me to do the work, to spend $3.5 million to do the engineering, the architecture, the design, and take it all the way to the Planning Commission and then eventually to the City Council, which on August 16th, 2021, the project was fully approved. So right now, your question is, what does it look like? I signed 5 work orders in October of 2021 to do the detailed engineering for the roads, for the drainage, for the water, for the dry utilities, for the sewer, and for all the houses. These are the 100% design drawings that the general contractor can build on. I understand these are going to be ready in the next 2 months. And once they're ready, they're going to be filed to the city in what's called a precise development plan. That will take another 2 months of approval. This is not a political approval. This is not a approval that requires the city to vote on. This is a perfunctory. This is a routine. This is a regulatory approval. Give the city the drawings, the engineered drawings that are required under the entitlement. The city will approve it to city standards, and then they'll issue you the building permit. So we think we will have our first permit to construct, we think by the end of the summer at the very latest. At that point, we'll start building about 160 homes a year. There'll be about 8 different product types. Each product types will have 3 different options. And we will sell out 160 homes a year for the next 6 years. We're very excited about it. We're keeping a very low profile in the sense that taking a $1 million investment, spending $3 million, and turning it into 174 million of profit, or 500 million in sales, 480 million in sales, is obviously going to win us a lot of awards in the real estate industry. But at this point, we'd rather only express our views within the investment community and not the larger real estate world. We're very happy to have a low profile in the real estate community and to respect that this value and this proposition belongs to the shareholders. We're not looking to get attention beyond that, at least not in this point in time. I think it's appropriate that we would get, we would look for this attention once the project starts construction. So again, we're looking at end of summer to actually break ground, and we're very excited about it. And if you do the analysis and you look at Greenbriar, you look at my consistent strategy that I do the opposite of what other people do. Other people promote their companies and then look for something. What I do is I build the assets up. I get the company into a very, very extremely undervalued position. And then once I have it in a very undervalued position, I then look for the marketing groups and the promotional groups that are capable of taking a highly undervalued stock and presenting the opportunity across all investors in North America. So that's the strategy with the company. And that's a bit of an overview about Sage Ranch. And I'm sorry if I gave you a little bit too much detail, but I thought, Sven, that I needed to give some color and some background there.
Yes, thank you for that, Jeff. It's very informative. Yeah, it's quite a track you have run already, especially since it is a project going on for more than 10 years. So if I followed you correctly, so you will be breaking ground around summer 2022, and then you will have like 6 production phases, construction phases for roughly 160 homes per year. So we're looking at 2023 up to 2028. Is that correct, the time frame?
That's correct.
Okay, great. Yeah. You also sent me the Altus report. I've read it, very interesting. The pro forma review made by them values the Sage Ranch alone, the land alone, at $111 million. That's quite a lot since you've bought it for 1.4 $40,000. Yeah, I've made a remark that says that is in stark contrast with the current market cap of Greenbriar, which only stands at 37 million Canadian dollars. So this looks pretty weird. You've gave a little bit of details how you operate on that, but what's your point of view if you say, yeah, this land is fully owned by Greenbriar Capital, it's owned by the shareholders. Our market cap is 37 million. The land alone is valued at 111. We have a project that's worth 173. The total project value will be roughly 480 million. That's talking about deep value. What's your comment on that?
Yeah, so typically what happens, I mean, that's my track record. If you look at my track record, I took my first company public in 1985. I've been in the public company business for 37 years. I started my first investment in 1978 when I was 18 years old. So I operate in a very rare, unique situation. I only look at projects, as you say, take many years to develop, but the returns are so substantial that if historically, looking at like example at Sage Ranch, the combined annual growth rate on the increase in asset value is 56% a year for the last 11 years. When I had Western Wind, my combined asset value growth in the 10-year period, 11-year period was 60% a year. So you have to be able to return substantial shareholder value. And the only way that you can do that is by not only getting projects that are substantial, you have to get them where the entry cost is so low because of very unique political circumstances. The Sage Ranch acquisition was really based on political circumstances. It was based on, it wasn't just based on, we've had the property for 10 years. This property's been around since 1974. And this property has been under development since the late 1990s. And when the project finally came into approval, it was 2006. The timing was so bad for the previous owners. So we did two things. We capitalized on somebody else's failure, but then we also had a political circumstance that was very unique. And that political circumstance was that the city was afraid of what's called changing demographics. It was afraid that people that the city was not used to accepting were going to move into the neighborhood and alter the demographics, alter the lifestyle. And this fear made the property unsaleable for the value that the property was at. So your point as Altus, so here's Altus, who is the undisputed gold standard of valuations of real estate, has stated, and you've seen this in the document, that the land itself now is worth $111 million. The issue is that land value was probably $40 million, $50 million in 2006. But the city refused to allow that. From that point on, the city refused to allow anybody to build on that property. So because of that, there was no value for the land. Mm-hmm. And buying it for $1 million was incredible. I couldn't believe it myself that the opportunity was there. I knew I had to wait several years to make it happen, in a sense that, you know, politically things had to change. But having gone through the time process, what we did was we didn't unleash a valuation from 40 million to 111 million over 10 years. What we did was we unleashed a value from 1 million to $111 million. So it was not just a time equation, which it was also a political equation, which completely changed something. So those circumstances are very, very, very rare. And they don't come very often. So that's why I stayed with the project. People were frustrated with Greenbriar. You know, why did it take so long? Very big projects that give very big returns take a long time. But here's something more important I want to say to all your subscribers and your investors. When you take projects that I create, like Sage Ranch, for example, because I create so much value, I don't need to sell $30 million of public stock to go and build a project. There's so much value built in. There's so much value built in that I can easily get a line of credit from a bank because they don't mind providing a $30 million line of credit because number one, they can put security on 111 million in real estate. And number two, that money gets put towards building homes. And those homes have pre-sold contracts. So it's a very secure process. If we were a typical builder, like if you look at all the building companies in the United States, the big home builders like Toll Brothers and KB Homes and what have you, and you look at their financial statements, their margins are around 17%. So what they do is they come to a guy like me or to Greenbriar and they buy our lots at $111,000 a piece. They do the construction very cheaply and they make about $80,000 to $100,000 profit. So they hope to make, excuse me, they hope to make 20, 25%. They average around 17%, but they've got to pay $111,000 a lot. So when you're in the situation of being a regular home builder, you have to pay full price for the lot value, not the home value, for the lot value. Our cost base is not $111,000. Our cost base is $1,000 per lot. So under these circumstances, this is the value creation that Greenbriar has done. And I know it's been a long time, but the Altus report came out only a few weeks ago. And Sven, I have to be honest with you, your timing was good because I needed to get the Altus report completed and I needed to get the Alberta deal signed and executed before I then devote 70% of my time to now looking for investment groups that have a national audience that can successfully not just increase the stock for one day, but can actually stand behind the company for 5 years and assist me in building a multi-billion-dollar infrastructure company.
Exactly. Well, very impressive. I also know that you have a very loyal shareholder base from your Western Wind period. That probably helps a little bit, but the newcomers are probably a little bit of annoyed, frustrated, do not know your strategy, which brings me to the following question. We also got them from a few readers, and it's a question about financing. You just explained a bit and said that it won't be an issue as the project value in itself is that large and the land value itself wouldn't create any issue for that. But what not everybody seems to understand is how is this going to be financed at the project level rather than by the company level? So it will be non-dilutionary in nature for Greenbriar shareholders. Can you go into depth with that a little bit? You've mentioned it a little bit, but maybe just to be sure.
Oh, sure. I mean, look, you can't just blame small shareholders. I mean, most small shareholders are naive as to why, the existence of how I build projects and what my projects are. But that naivety is not just limited to small people. There's a very big real estate investor. If they did what I have done, they would not capitalize on the 174 million in profit. What they would do is they would simply sell the 1,000 lots on a wholesale basis, and they would grab a check for 50 or 60 million dollars and call it a day. Now, why would I do that for? Why would I shortchange the shareholders for? You can argue 50, 60 million dollars is a lot of money, but I think 174 million is a lot more money. And why would I shortchange the shareholders for? So 99% of people in the real estate business, they would never, 99.9% of people would never have purchased this land for $1 million because they would have gone to the city. The city would have said, look, we're not going to let you build. And they're going to say, you know what? I don't care if it's only $1 million. I'm not going to tie it up. But I can guarantee you that the 0.1% that would have bought the land for $1 million, 3 years later, they would have sold it for 2 million. Or 4 years, they would have sold it for 5 million. And finally, in 2018, the person who owned the land at that time, who maybe was in it for $7 or $8 million, they would have gone through the process and they would have sold the land right now. They would sell it to KB Homes. They would sell it to Toll Brothers, any of the big national builders. They would sell it. KB Homes would say, you know what, the land's worth 111, but we're not going to. We're going to give you the discounted value of the land value. We're going to give you $50 million. So KB Homes makes 61 million on the land value, and then makes another 65 million on the construction side, improvement side. So now you're leaving another company $125 million on the table. So this is not unique with the small shareholder. This is actually this is sort of the general trend, how people think, whether they're small players or big players.
Mhm.
So the only players that really make money are the really long-term investors, or people that I call fastidious shepherds, people like myself who know how to get every penny out of a project. And I'm not talking pennies. I'm talking the difference between $50 or $60 million and $174 million. And that's the same thing, Swen, that happened with me with Western Wind. When I built Western Wind, I started with $250,000. I sold the company 11 years later for $420 million cash. All my competitors were JP Morgan, Morgan Stanley, multi-billion dollar institutional funds. How did I win with no money? I won because I picked projects where I knew the margins were really very high, and there was political obstacles that took several years to sort out the problems. Big guys don't want to sort out problems. What they want to do is they want to take $5 billion and they want to deploy it right away. And they can tell you that they want to get a 15 or 12% return. But if you look at Brookfield Asset Management or all the big infrastructure companies that compete with Greenbriar, at the end of the day, they only have an 8% return. They go to the capital markets, they borrow money at 4%, and they make 8% on the equity. So they double their money on the arbitrage between the money they raise in the capital markets and the money that they make in the asset, because they can't make high margins. When you're pushing 5 billion here, 3 billion here, 2 billion here, 12 billion here, it's a very competitive market and the yields are very, very low. So when we sold Western Wind, we sold Western Wind to Brookfield, who basically bought us for an 8% yield. Nobody knew the financial statements at the end of the day, because Brookfield bought the company 4 months before our next financials was due. And the price they paid was basically 12.5 times the actual cash flow of what the property is. So again, I get involved in very unique situations. These situations are based on finding very deep value, always based on political obstacles in why the opportunity is available so cheaply. And then when the leverage becomes so high in terms of the value creation being so significant, we don't have to go sell equity to go get money to go build a project. We simply have so much value built in that we go to what's called project level financing, which is having a lender loan money against the security of the asset, which is the property, and that money goes into a construction escrow account, which Altus is one of the leading agencies in managing that construction escrow account on behalf of the bank, and it releases funds to the general contractor based on every stage when a house is completed. So an example is when you build 160 homes a year, which is considered very large scale production construction, very low cost, you build 40 homes at a time. So it's like a big outdoor factory. If you can imagine a huge outdoor factory, 40 foundations get done at once. These foundations are not like in Canada or Europe with a basement. These are just simply 6-inch concrete foundations, no basement, a 6-inch strip. Concrete foundations are poured on 40 foundations at once. And then you have the framing crew comes in like a factory. And this is, I'll be honest with you, this is immigrant workers that are legally in the United States, but they're so grateful to get a job of $30 an hour they don't work like a union guy getting paid $60 an hour. They work like two union guys getting paid $120 an hour. And they do the work of $120 an hour for $30 an hour. And that money is still higher than any money they'll make in the country, and obviously 10 times more than they'll make what in the country that they come from. So these are large production scale manufacturing operations outside. They'll build 40 foundations at once. Then they'll build 160 walls at once, because most homes are square, roughly square shape. So you'll see all the walls getting built at once. The walls will be set up. Then you'll see the roofing crew come in. And you'll see the electrical come in. It's run like a factory. And so this production sequence, the general contractor, to get the contract from us, they have to provide liquidated damages that if they don't perform the job on schedule, on time, that they pay us a penalty for not delivering under performance. In return, what they get is they get 8% fee on the construction cost of each home. So if each home has a vertical construction cost of $99 a square foot, the improvements and the improvements and the offsite costs, the soft costs like the building fees and whatever, that's another $50 a square foot roughly. So total cost about $150 a square foot. That compares with $300 a square foot in Seattle, $300 a square foot in Vancouver, $300 a square foot in Los Angeles, $300 a square foot in Montreal or Toronto. So it's a whole different pricing structure, completely different style of operation, completely different style of product. The contractor gets 8% off of that $100 a square foot. It's built in the $100 a square foot. So they will go out and they'll build the foundations. All the foundations are up. Then all the walls come up. And by the time the roofer comes to put up the roof, he'll get a 25% draw. Altus will be the gatekeeper for the bank at the construction escrow account. It'll release the money based on an inspection of all those 40 roofs being installed. And then there'll be another 25% released on the completion of the roof, completion of the windows, another 25% completed when the electrical and plumbing's inside, and then another 15% completed when the keys are delivered to the homeowner, and then another 10% completed 3 months afterwards to make sure there's no defects inside the house. So it's a very systematic, structured way of financing things. It's done on a day-to-day basis. The only thing that makes us unique is we're doing large-scale production homes, which again is not really unique because that happens all over the Southwest United States. They're building homes in Texas now at $85 a square foot. They're building homes outside of Phoenix for $92 a square foot. So $100 a square foot to be 90 miles from Los Angeles is very normal. It's very normal provided you're building 150, 200 homes a year. If you're going to build 10 homes a year in Tehachapi, your building costs will be $175 a square foot, right? So it's unique. We're doing production homes, but the most critical thing in the uniqueness is we fought these political obstacles where we've created $111 million of built-in documented land value. And that is our equity that we can use in it for the bank. So we can borrow money at 8.5% versus go to the capital markets, dilute our shareholders, even at $4 a share, dilute our shareholders, because when you dilute shareholders, shareholders expect like a 25% rate of return. And why would you want to do that when you can borrow money at 8.5%? So that is how sort of the mathematics works, and what makes this exceptional and what makes my style different, and why I know I'm a very unique operator in this business.
All right, so you seem to be specialized in unique situations. It's a value investment style. Another question also from our readers is, let me check where I am in my page. Yes, I'm sorry. Yeah, another question that pops in was, you've made a joint venture agreement with Captiva Verde in 2020. and you set there in 3 terms. 2 of those terms were already met by Captiva. The third one, which was the funding and permitting of development costs, they have not been met by Captiva. And the earlier set deadline in JV agreement has also been passed since the final approval from the city of Ciachurski has taken place. But you also stated in the last quarterly filing that it was noted that it was stated that no determination has been made as to the effects to the JV. So what's going to happen with Captiva? You're still discussing new terms with Captiva. Is Captiva out of the play, or is it still undecided? What's your direction there?
Yeah, so I don't know. Well, first of all, Captiva is not out of play. It's a question that Captiva was supposed to provide all of the funding, all the way to project completion. And Captiva got into trouble with Solargram. It was definitely unintentional. It got in trouble there. You know, and from a historical perspective, by the way, I took over Captiva when it was called Arrowhead Resources in 2013, and the stock was trading at 1 cent a share. It was called Arrowhead. I took the company over in October of 2013. Again, the stock was trading at 1 cent a share. The stock went to 62 cents a share, and we got into the organic farming business. That had some issues, and then I left the company. The new directors who took over were not able to be successful, and then I took the company over again. I did not roll back any of the shareholders. We did a little financing at 5 cents, and then we did an IPO at 10 cents. And then if you followed Captiva from the day of listing, October of 2018, when we went public at 10 cents, I think the stock went to 8 cents or 9 cents for about a week or two. And then the stock 2 months later went to 49 cents. And over the next 18 months to 2 years, the stock traded over 200 million shares, and the stock traded as high as 76 cents. So from all the investors' perspective, everybody in Captiva made money. We had an issue with Solargram, which, by the way, is being rectified. Their lawyers have advised us they're coming up with a settlement agreement. And we have things going on in Mexico. This conversation is not about Captiva, so I don't want to make this a Captiva conversation. But we're not going to disclose any information in Captiva until we resolve the Solargram issue, because the party on the other side, we're not going to give them any advantage on what we're doing to make it easy for them. We're coming after them very hard, and I do know that they want to settle this. We've talked about terms. I can't release that right now, but their lawyers will present that. So Captiva went and had some hardship that was not created by us, and as a result, they have not been able to fund the project. And we don't know yet how this is going to filter out to be the exact profit percentage at the end of the day. Captiva is not out of the equation at all, but I don't know the percentage right now, and I can't say that because I honestly don't know that answer. We'll know that answer when we start construction. But having said that, it's a very interesting question, because it aggravates a lot of shareholders, because they're sitting there going, okay, here's now an asset value of $174 million of net profit. Greenbriar has 29 million shares out. Captiva has 170 million shares out, or whatever the number is. And so they're looking for the arbitrage to make that decision. I can't give them that answer. That arbitrage decision is not there for them right now. What I do know, and I can tell that to all the shareholders, is that what we know historically is that Greenbriar, by the way, is now owns 36 or 37 million shares of Captiva. Is that when Greenbriar accelerates in price for its own reasons, Captiva always comes along. That's a general market statement that I'll make that's 100% accurate. If you look at the chart of Greenbriar, every time Greenbriar goes and spikes in price, and again, I'm trying to avoid a spike and have a more sustained approach, because if you look at, for the shareholders of Captiva, because you're asking a Captiva question, and that's probably a Greenbriar question, there was an influencer that I never met in my whole life, and he was a person from China who put out a video on May the 30th, 2020, and he did a 10-minute video of Greenbriar based only, not on Sage Ranch or Alberta, just solely on Montalva. When that video came out, the stock went from $1.25 to $4.64 in 4 days, and it traded 117 million shares. If you look at Captiva, if I'm not mistaken, I believe within a few days, the stock, well, within a day, the stock went to 50 cents. And then a week or two later, it went as high as 76 cents. So this is a very historical trend with Greenbriar and Captiva. Now, the issue with the influencer was the influencer did not talk about any other project. And the influencer, I found out, was 20 years old and never followed up with the company. So although he created the share price to go to 464, the share price settled in the $2.53 range for about 2 months after, which you can see in the charts. And there was no follow-up work at all. So we're going to avoid that. And by avoiding that, if we speak to anybody, we want them to follow up with a video at least every 2 weeks, not every month, not every week, but at least every 2 weeks with an update on all the activities that company is doing. So all the shareholders in the investment sphere of the influencer, or whoever that influencer is, in the case of this Chinese influencer, he had 120,000 subscribers. Well, after the stock went to 464, 2 days later, all his investors were asking him questions on the company, and he did not answer them. So he completely left everybody behind and never did any follow-up work whatsoever. So we want to avoid that, and we want to keep everybody up to date, and that includes the relationship with Captiva, you know, on a very, very current basis. So to answer the gentleman's question on Captiva, I don't know the percentage right now because we have other things in Captiva that I have no control of, which is the Solargram issue. I want to settle that. As soon as we settle it, there's no doubt that the stock price will go up. Once Captiva is back on its feet again, its whole situation will look differently when the houses start construction. And we can look at everything at that point in time and then come to a final determination as to what the percentages should be. And that's the honest truth, because if it wasn't the honest truth, I would buy 20 million shares of Captiva myself if I knew what the answer was going to be. So anyway, that's basically the answer on that relationship. And, you know, have everybody know that we converted not all of our debt, but some of our debt into an additional 25.8 million shares of Captiva. And at this point, we own, I think, we own something like 37.7 million shares. It's in the PowerPoint somewhere. I put the exact number in. We own 36,487,500 shares of Captiva. So it's the Greenbriar's advantage that Captiva does extremely well, and we'll ensure that it does do very well. But again, Greenbriar is the flagship. It's the leader. Captiva will follow.
Okay, great. Thank you for that explanation, Jeff. We're running a little bit out of time, but if you have a few more minutes left, I would like to talk about Montalva. So you have the Sage Ranch project, which take you well over a decade, or almost a decade, to advance it to this level. And we have another great prospect, is Montalva. A lot of shareholders were into the story because of Montalva, which is the largest solar battery project in the Caribbean and Puerto Rico. And that's also seeing the end of the light at the end of the tunnel, because last thing I've heard was you were in settlement negotiations. And there are a lot of institutions and governments involved in there, like PROMESA, PREP, FOMP, PREPA, PREB. So it's quite difficult to follow for a shareholder. What's the latest news in there? What can you tell us about the latest status of this project?
Yeah, sure. So Montalva, you know, just for the background, Montalva was typical in my unique value creation proposition, and that is the average value of a solar contract in the US is around 3 cents per kilowatt hour. Mm-hmm. And the Montalva contract is around 14 cents a kilowatt hour, including escalation, a 2% annual escalation, inflation escalation. So it's an extremely rich contract. And that's why I held on to the project for over 10 years, because it has over $2 billion of value. When we finally came and got the Puerto Rican government to approve the project, to our surprise, the federal government changed its mind. Now, it wasn't really the federal government per se, it was just simply one person that was in charge of the oversight board. And she sent, by the way, she handed her resignation in last week. She was working for she's a Ukrainian woman who used to be the Minister of Finance for the Ukraine. So, you know, in my opinion, she has a different perspective on what the government's involvement is in private matters. And she was backed up by the big oil and gas companies, which is no surprise because Puerto Rico has 66% of its electrical generation from the burning of oil, of conventional crude oil, which is the most expensive generation in the world. So she's very much of an industry oil and gas person. And she objected to not our solar project, to all the solar projects. And to the 2 contracts that were awarded last year in February, just to let all your investors know that those 2 projects have not even started, or they have not even received any financing whatsoever. So it shows you that the corruption was not even effective in helping its own people out. So here we are a year later. What I can tell you is that we are in signed negotiation with PREPA. We're in front of the Energy Bureau. I cannot talk about the exact details, but the utility does want to settle with us. I did receive a confidential text asking if we'd be willing to increase the size of the project from 80 megawatts to 150 megawatts. I said yes, but I could not give any details on Stockhouse or any blog site because we are prohibited from talking about the confidential negotiations. It is the opinion of our litigation team that this will be settled this year. It may be settled sooner than later. I don't know. I mean, I'd love to tell you it's going to be settled in several weeks, but it will be settled this year. And there could be some big surprises on how fast it will be settled. But I am told by our litigation team and by federal government officials that they want these solar projects in production as soon as possible. And that includes Montalva. And I cannot say anything more. I wish I could, but I cannot.
Yes, okay, I understand that. Thanks for that. So if I recollect correctly, a few years ago, you received a court order for around $190 million, I think, from the government of Puerto Rico. But as we stand now in 2022, the project is still in play. You're not going to settle for a monetary, for something monetary, but you just still want to execute that deal, build a plant, build a farm, and deliver the solar.
We want to build out the project. Yes, that is the best value to the shareholders. Have them have the long-term revenue, the long-term year-to-year profits. That gives a bigger valuation for companies like Brookfield, Interjex, Algonquin, all the big. There's a whole series now of what they're called yieldcos. They used to be called 15 years ago in Canada. They used to be called income trusts. They're no longer called income trusts. They're called yieldcos. Yieldcos are just simply, infrastructure, alternative asset managers that are publicly traded. They want 30, 40 years of cash flow, return the money to the shareholders. But that is expanded now. Now you would have companies like Brookfield, who would have the biggest shareholders would be pension funds and investment funds. Those investment funds and those pension funds, they're saying to themselves, why am I buying Brookfield stock or Brookfield preferred shares and getting a 4% dividend every year and the price appreciation? Why don't we invest directly and buy these assets ourselves? So you're seeing a lot of private investment funds and pension funds, big pension funds, multi-$100 billion pension funds. They're actually buying companies like Western Wind and Greenbriar themselves because they want to have a 30-year guaranteed revenue that they can look after their obligations, which their obligations are obviously to their investors, which are people who have their pension money invested in these funds, and they want to have a 20, 30-year payout of having continued revenue on a very stable basis. So this is who will be the buyer of Greenbriar. I'm not going to tell you the day, but I can tell you that once construction starts in Sage Ranch, and once construction starts in Alberta and in Puerto Rico, the entire market capitalization is going to look completely different than what it looks like today. And you're not going to need a marketing team to talk about the company. The valuation is understood. I would tell you that we could probably get a better valuation today from those same funds, but those same funds are not paying attention, meaning we have not communicated with Brookfield or with Algonquin or any of the big real estate companies, what we've done. Nobody's reading our news release. So my objective, as I've earlier stated, is I will spend a lot of my energy looking for investor networks that are willing to get behind the company, not just for 1 day or 2 days or 1 week, but actually for several years, and allow me to build up this multi-billion-dollar market cap. Because at the end of the day, Sven, we only have 29 million shares outstanding, and I'm targeting minimum billion-dollar market cap. So we are now coming to the very end of having the initial projects past the approval stage, so that we can go out and complete what we call the detailed engineering, the work that you do after the approvals, so you can get the contractors and the banks together to do what's called the project financing. That's the stage that we're in today. And so I have a big workload ahead of me, which is not only managing that, but looking now for investment groups that are willing to tell that story.
All right. Maybe a few last questions. So there is the involvement of Keller Williams, who will be doing the sales for Sage Ranch. There's a lot of interest. I've read that about 1/3 of the project, there's an interest about like roughly 200-300 homes already. Are there any homes sold already?
You cannot. So you cannot formally take a deposit until you pull a building permit. But there's hundreds of people that have signed up with Keller Williams that have asked to get a home there. Right now there's a housing shortage. There's 3.5 million homes short in California. California has been in a housing crisis for the last 20 years. Just drive through, drive through San Francisco, drive through the suburbs of Los Angeles, and you'll see miles of people along a street living in their cars and living in trailer. This is not homeless people. These are people that do not want to pay $3,000 for a 1-bedroom apartment. So they have a job.
Mm-hmm.
Their wife works, the husband works, the kids live in the car, they live in the trailer, the kids go to school, the mom works, the dad works, and they make maybe $4,000 or $5,000 a month. They don't want to pay $3,000 for a 1-bedroom apartment. So when you have product like we do at $450,000, the federal government gives you a mortgage at $1,100 a month, because you get 1.1% interest on a 38-year mortgage, and you only need 2% down, 3% down. So there's no issue on the saleability of the homes, like zero issue on finding a buyer for the homes. 0, 0, 0. Okay,
that's great to hear. Okay, it's almost 9 o'clock, so maybe last comment about Alberta, Westlake agreement, the 90 megawatt solar farm there.
Yeah, so so with Montalva taking some time, I had to strategically look for another value proposition where, again, it was a high value market, not a 3-cent market, which requires you to sell stock to raise the equity, but an opportunity like Montalva, where the revenue is so high that the cash flow is so big that a bank is comfortable putting 100% financing, because the cash flow is 3 times more than the mortgage payment. So this is a opportunity that I found in Alberta a year and a half ago. And, you know, we can't, the price is better than 10 cents a kilowatt hour is all I can tell you. Where the average market in Alberta, Canadian, is around 5 to 6 cents. We're getting over 10 cents. I can't say more than that. It's a very lucrative project. The reason why is Westlake is a very big oil and gas producer. Canada has become so anti-oil and gas that it's restricted pipeline construction. And as a result of that, big oil and gas producers like Westlake, where they have a lot of gas commingled with their oil, they can't sell the gas. They can take the oil and put it in a truck. You can ship the oil because the oil is valuable in terms of energy density, but you can't put the gas in a truck. So they have to what's called flare off the gas. And when they flare off the gas, Westlake is recorded in Alberta to be the 5th largest polluter of CO2. So they need the carbon credits that are generated from our solar energy. So we not only provide them electricity cheaper than the 12 or 14 cents that they pay when they buy at retail, but the carbon credits are worth another significant amount of money. And so that's why instead of getting 5 to 6 cents, we're getting well over 10 cents. I'm going to get in trouble. I can tell your investors, I don't want to see this in Stockhouse, this comment that's made. I just want to, you can leave that in Europe, but it's an extremely lucrative contract. And we're very happy about it. So you'll see some news on that shortly. But I appreciate the time, Sven. And if you have any questions, just send me an email anytime, Sven. I'll answer the questions. And if you don't mind, we should do a follow-up video every month, to be honest with you, and let the shareholders know what's going on.
Yeah, that sounds good. Yeah, that sounds good. Thanks very much for your time and the thorough explanation. Yeah, I'll make an article about it. I'll put the details in it. And yeah, sure, definitely want to have a follow-up call once a month or twice a month, every 2 months. We'll see about that. And I apologize for my speaking. I'm not a native English speaker, but I can read English very well.
Oh, well, your English is better than my Flemish, so I'm very happy.
That might be, yeah.
Okay,
right.
Thank you so much.
Thanks.
Bye, everybody.
Yeah, goodbye, everybody.